Hey guys, welcome to another video brought to you by iTrendz. My name's Spencer. Zach's also going to come in this video. We're going to go over RSI for you guys today, and it's part of our 5-week indicator series. This is going to be a little snippet on RSI. We also are going to have a bundle coming out sometime in the middle of March. It's going to go in depth on indicators and patterns, so stay looking forward to that. We'll have links under in our description. With that, I'll get started going over the RSI. So on the agenda today, we're going to go over what is RSI, what it's used for, how to use it, when to use it, some supporting factors. We're going to go over some key examples that we had throughout the week and just going through RSI in general. And then we'll pass it off to Zach to go over a little bit about divergence and how that correlates with RSI. And he'll go over the key takeaways at the very end. So basically, to start off, what is RSI? And RSI is short for Relative Strength Index. It's a technical indicator, basically measures the momentum of the price fluctuation of a stock and whether the stock is oversold or overbought. This is focused a lot on volume, and you can see when people are entering or exiting a trade. You can also notice when a trade is starting to slow down or maybe reach its resistance or support lines. And we'll go that a little further on in the video. Why it's important. The main reason is used for entering and exiting your plays. You never want to chase a play. You never want to jump into that FOMO play. You also want to see if a point of like when a stock's oversold, you know that a bounce is going to come, or vice versa. When it's overbought, you know that it's going to come. A bounce is already going to come towards the downside. And we'll show this key example of a firm a little later, and you'll see exactly what we're talking about. There we go. So what is RSI used for? RSI, like I said, entering and exit. You can also tell when trading options, you can tell that it protects your entry because you know the direction of the trade. You can also spot like general trends. Like if you're looking at a stock and you're waiting for it to break a certain resistance point, you want to make sure that the volume's coming into the trade and that the volume matches up. So that's why RSI is good, because it'll show you the strength of the momentum, which way the stock's going, and if the rally still has more room to grow or if it's going to slow down at a certain point. But you can really tell when a trend is broken. Like if a hard resistance point's there and you have volume, the RSI is going to show you the strength of this push and whether it can maintain the direction it's going. So when to use RSI? For RSI, the main purpose we use it for is charting our entries and exits. We want to see where, if the stock has crossed its midpoint, which is going to be at 50. Normally, like I said, that overbought is going to be at 70. Your oversold is going to be at 30. When a stock crosses the midline at that 50, you can tell that the direction is starting to change. We'll also go over a couple of indicators that also highlight that as well. The longer time frames, they give you a more accurate picture because you're going to prevent that whipsawing that happens when you go under the 4-hour chart. And you also know that whenever you're looking at RSI, that if it gets to an overbought point, you know that that stock's going to have to cool down before it keeps pushing in either direction. So how do you get RSI? The RSI is best used on the 4-hour or longer time frame because it gives you a more accurate picture of where that stock is currently, because the goal is to see where the stock is sitting based on the momentum and where it's going. As you can see on this right-hand side, we have the actual calculation for it, but thank God that the platforms give us it automatically, but this is how you would find it if you wanted to do it manually. You're going to take your RSI, you're going to do 100 minus 100 over the 1 plus RS, and that's your average gain, your average loss. But if you look up on your indicator, this example is on Webull. If you go to the little indicator symbol, you just tap on RSI, you click it on, and it'll show up in a box underneath your time frame. This is on the 4-hour time frame, and it automatically highlights that 70 and 30 point just as your marker, and you'll have that 50 as your midline. But it already appears on your chart with that 70 and 30 highlighted. When to use RSI. Now, when you're using RSI as a day trading tool, the 4-hour gives you the most accurate reading on where that stock's going to be sitting and where it's moving. The oversold and overbought are the main reason the indicator is used, because it highlights when a trend's going to slow down or if the resistance or support line are actually truly broken. When looking at a chart, you never want to enter on a first candle in over. You want to make sure that the volume and the momentum is in your favor. Generally speaking, a bull trend will have a 40 to 90 spread, with the 40 to 50 being your support line, and a bear trend will have the 10 to 60 with that 50 to 60 being your resistance point. So you know that if a stock's sitting on that 50 line, it needs momentum in either direction. It hasn't confirmed whether it's up or down. So that gives you a key maybe to hold off on that trade and wait for confirmation till it gets towards that 60 point where it's going to go more bullish or higher. So here's an example. You can see on Disney, we actually day traded this. This is on the day chart. You can see when Disney got oversold, you can see that it's under that 30 line on the 24th to about the 26th. That was a key entry point for Disney. You can see that naturally, since it was underneath this oversold line, stocks are going to bounce. And you can see they bounced right back to the midline within the next few days. So if you were to use RSI on Disney, you would have captured this move from this 129 to about this 140 range. And that would have given you $11 upside on this stock. And you can see we're still waiting for confirmation towards that upside, which eventually Disney did. But this just gives you an indication of when a stock is really getting beaten down and where the actual trend can turn around. You can see on the 20th, it took a huge hit, came all the way down to your 24th, where it bottomed at that 129, and eventually the stock turned around. So now you would wait for more confirmation till it got above the 50 midline into that 60 range to take it for a longer time out and a longer time frame for a bullish confirmation and to see a true reversal of the pattern, that the downtrend that it was in. And then an example from today actually is Affirm. So Affirm, actually, they missed on their earnings and the stock was taking a tremendous hit midday, or it was actually towards the end of the day, right around that 2 o'clock area, 2:30. You could see that Affirm became significantly oversold. It actually got down to about 9 on the RSI. So knowing that that's extremely oversold, a bounce would have to come in eventually just because of the nature of it being oversold so quickly. Our chat was able to get in on this play and actually take a 45% return in a matter of 20 minutes, just based off the concept that when a stock goes oversold and the RSI is showing oversold at such a rapid pace and a significant drop, that naturally the stock's going to have to jump back. And that's what we captured using the RSI today on Affirm. You can also see that you can also use other indicators to support RSI, which makes your bullish or bearish case even stronger. So here's Disney, where it's paired up with the RSI, which is going to be that blue line, and as well with the VI, which is the vortex indicator, which we have another video in that bundle that's coming out in March. You can take a look at that. But you can see the VI is showing that this purple line is the positive line. You can show that it's showing you that it's going to cross here within a matter of days, and the RSI is above 50. So this is where you would look at Disney and start taking a bullish stance just based off these two indicators. And if you had to do that, the Disney moved from 145 to 160 on earnings. But just based off these indicators, you can tell that the downtrend was reversed right at 129. And then when it got in this 145 area, the RSI and the VI are both showing you on the daily chart that the trend is turning around on Disney and going towards the upside. With that being said, I'm going to pass it on to Zach. He's going to go over Divergence and give you some key takeaways on RSI.
What's up, guys? Zach here. So let's talk a little bit about Divergence, which is another great tool of the RSI. It's kind of an underlying tool that is not really talked about in the natural, more institutional teachings of it, but you can find through a lot of education on YouTube or just on Google and such about divergence. Now, divergence is really, really important when used on larger time frames and not so much on the shorter time frames, because it can actually get too convoluting and too confusing when you're on that shorter time frame, like a 5-day, 5-minute, or even a 20-day, 1 hour. Honestly, it's really best used on a 4-hour daily. I personally love to use it on the daily maximum. The weekly also makes that a lot of sense as well. But what divergence is that it's actually showing you what is the strength of the stock relative to the actual price. Is it increasing or decreasing? So when you're looking at the divergence, as you can see on this graphic here on the left side, it's bullish when we're looking at the lows of both the indicator and the stock. So you can see as the regular bullish divergence, the price is trending down. So you're getting lower lows, and you're getting higher lows on the indicator, indicating that the RSI is showing you that the stock is slowly gaining more strength, even though the stock is coming down. But at some point, you can see here, we actually just went over M and W patterns. If you'd like, go check that video out. It was posted right before this video. So if you'd like to see what this pattern actually is right here, which is a W, you'll be able to see how to trade those. But you can see that the RSI kind of signaled that there was strength growing in the underlying asset as the stock was coming down. So, once you break your resistance that you've identified or your neckline, that you will then begin to continue to trend upwards. And that RSI would have given you that prior hint to that, where you can actually kind of pinpoint that. And then if you go down to the hidden, you look down here, you look at the prices on the stock, the underlying are actually getting higher lows, and the indicators are getting lower lows. And that's called hidden bullish divergence. Hidden bullish divergence is a lot less indicative of a reversal, and it's also just slightly less strong of an indicator of a reversal. So I really just pay attention to the regulars on both bullish and bearish. So it's really important to pay attention to the fact that the bullish has to do with the lower lows or the higher lows of the indicator and the underlying, whereas the bearish has to do with the higher highs and the lower highs, excuse me. So that's really, really important, because there are definitely, I've seen graphics on Google with a bunch of different divergences and stuff. So it's really important not to confuse yourself and to keep it simple. So I essentially just pay attention to the regular bullish divergence and the regular bearish divergence. And when I'm just focusing on those things, it becomes very apparent when there is a divergence in the price of the stock relative to the actual strength of that price in the stock. And so it's very important. So definitely take a screenshot of this if you're confused, and utilize it and just back test it on your trading platform. And you'll see that it's a really, really good indication of a reversal, just kind of like one little level added to utilizing the RSI. So anyway, it's definitely important, again, to keep that in mind on a smaller time frame, on a larger time frame, excuse me, so that you are not getting things confused when you're looking at it on a smaller time frame, because it'll pop up all over. Just like we looked at a firm on the 5-minute, you saw it. We just like Spencer said, we traded it off of that oversold bounce. But if you're trying to read divergence on that 5-minute, it's just too much going on. And you got a lot of things that were working. Just pay attention to that overbought, that oversold, and utilize the indicator that way. With that being said, if you guys learned anything from this, it should be one major thing. The overbought is above 70. The oversold is below 30. So as a stock is trending up, you will be able to gather a lot of information about how much strength the stock truly has as it's trending up by looking at the RSI. Because if the stock is trending up and you're looking to get into that stock, but the RSI is already at 77, 83, then you could wait on that trade, because the strength it's getting too overbought at that point. And then vice versa, if the stock is trending down towards, say, 15 or 22, it's really oversold at that point. So you should just take a stance back, stand back a little bit, look at it and be like, I can wait for this trade to settle out, make sure that RSI calms down, and then enter the trade once that RSI cools off. Or if you would like to take the reversal off of it, there's also the trade off of that, just like Spencer demonstrated with the Disney. With that being said, this is the RSI indicator review. Like mentioned in the W&M patterns, if you guys are coming from that video, if not, highly recommend that you go watch that. But we are doing these sessions once a week for all the way up until about mid-March, where they're completely free. So if you'd like to join them, our link for the Discord is down in the description below. It's discord.gg/iTrendz trading. You can find us there. Just message one of the admins and we'll get you set up. Again, it's for free. So if you'd like to come in and listen to us speak about a bunch of different indicators, we're going to be going over fibs. We're going to be going over triangles, bull and bear flags, et cetera, et cetera. There's going to be a lot. It's a whole 5-week program that we're running inside the Discord. So highly recommend that you guys come on, join us inside of the Discord. We also have our website linked below. And also our social. So be sure to check that out. And it would really help us out if you gave us a subscribe, just because we are a smaller channel, but we are going to be putting out a bunch more videos for you guys to kind of consume and get some knowledge out of. So if you have any suggestions, with that being said, definitely drop them in the comment section below so that we can kind of take that in, get that feedback, and then deliver on them. Because honestly, we want to ramp up the content that we're producing quite a lot here. So with that being said, the feedback is really helpful, because we obviously want to help and provide value to you guys. So anyway, hit that subscribe button, comment down below with any feedback you guys have, and we will see you in the next one.